Good morning, everyone. December the 15th, 2015, the day before the Fed announces the widely expected 25 basis point rate increase. I think that's built into the market. What people will be looking at and what will probably take both markets higher, stock market and treasuries, is the language of when the next rate increase comes. Everybody widely expects we've raised interest rates, long overdue in doing such, but we're going to watch the market and make sure that the next interest rate increase is warranted. The whole deal right here facing the Fed, the only bright spot in the economy is the stock market, and they've got to keep prices sideways and hopefully higher. So we've got a seller above 2100, we've got a buyer maybe 1950, 1975 as it stands right now. The market's come back pretty strong. And we can see the manipulation in the stock market. Every time it looks like it's going to start to sell, somebody comes in and buys everything until there's nothing left to sell. Then the pressure goes back on the shorts. And we saw that several times yesterday, and it's happened again in the overnight session. So the Fed's going to do everything in their power to keep the stock market high. More hopium, I would guess. Hey, you may be out of work, but the stock market's holding in. Business in your area is bound to get better, and just hang in there a little bit more. So that's where we find ourselves. So stock market strength, the inverse relationship continues. We are pointed lower, but I don't believe the market breaks. So we've got this low over here at 3.5. We definitely have a B. So I think the market can go a little bit lower. So we're going to try to buy 01 to 5 for buy 1, and then buy 2 will be 25 to 29, on the idea that the market is ready to rally when the Fed raises interest rates tomorrow at 2 Eastern. Sellers are at 12, so 11 to 15 sell 1, 19 to 23 sell 2, and if the stock market sells today, we do not want to be short. The inverse relationship will continue. We do have some news to get through this morning, but again, tomorrow's FOMC probably keeps everything today pretty subdued. CPI 0, no increase. Core plus 0.2. Empire Manufacturing Survey -7, and Housing Market Index, which is always inflated. They have to. The guys that put these numbers out to keep the loans coming at 63. So the focus, my guess, will be core inflation, Empire Manufacturing, and then finally the Housing Market Index. You're looking at the 30-year. Again, I think we're headed lower, but we probably don't break, and my eye is pulled over into these potential support areas. So we've got 154.02, we've got 54.16, we've got where we are right now at 54.24. So I think we're headed a little lower. 21.17 buy 1, that's very, very aggressive. And then we break that 1 to 5. On the sell side, 3 to 7, and we'll put a question mark at 31. Right out of the chute, then 15 to 19 for sell 2. This big market's got a lot of range, and we usually get to our number 2 levels without too much work. Then you ask, why do I put number 1 levels out there? Well, it's just, if the number 1 levels hold, whatever is happening should continue to happen. If normally the market's going to go to the number 2 levels, where the exchange members and the professional trader can gun stops. But given what's been going on in treasuries, even our number 2 levels can be taken out pretty quickly. I mean, yesterday we had a 2-point move. Big market. Okay, gold, we got down, stops below 60, so 61.59 buy 1, buy 2 55.57. Trying to trade higher, rejected prices over 65, so 65.67 sell 1, 70.72 sell 2. I do think gold is headed lower, probably on hold through the announcement tomorrow. I know every central bank in the world would like gold lower, take some of the pressure off of their currencies, but that probably won't happen. And there's this problem in the Middle East. Turkey is doing more than waving a red flag in front of the Russian bear. I mean, that particular situation, Russia needs the transportation, but Russia doesn't screw around if you mess with them. It's always tit for tat. It's been that way forever. So Turkey may think they can get away with this, but I wouldn't bet on Turkey being able to get away with it with Russia. I mean, Russia fired across the bow of a fishing boat yesterday, and then a couple of days ago they were going through the either the Dardanelles or the Bosphorus, flashing missiles at Turkey. So the signs are there. Okay, the yuan was devalued for the 7th day. It did take the market higher. There's Asia. You can see the high comes in just before London opens. So 10.75, sell 1. 111 even, sell 2. China keeps devaluing. The euro's going higher. 110 even, buy 1. And then buy 2 will be at 75. Mario Draghi was given credit for yesterday's early morning rally. And again, he's really a master at rhetorically supporting the markets and getting his way. And keeps the costs as low as he can for the European Central Bank. Okay, crude oil. We are in that area where people prior to 2008, if the reservoir, the structure showed that they could produce it in the $30 to $40 range, they would drill it, and that's where we are right now. And a lot of yesterday's rally was attributed to a call from Nigeria for an emergency OPEC meeting in February. If price of oil doesn't start back up by February, lots of OPEC members are more than feeling the pain. Probably the biggest one is Venezuela. More than the United States frackers are under a great deal of pressure right now. Russia, over the weekend, released a plan where they expect crude prices to be $40 to $60 for the next 2 to 3 years, and they're building all their financial plans on that. So $40 is the number that keeps popping up. 36.75 to 37 is the first sell band. Like it had done close to 37, 37.50 would be sell 2. The buy side, we are pointed lower, but we have volume very high in the distribution. So I think this volume down here represents an opportunity for us. So trying to buy that 35.75 area. Buy 1. Then buy 2, 35.25 to 50. Actually, let's just make it 35.25 for buy 2. Okay, the E-mini. I'm guessing we're going to have a trading range today with a bias to the upside. I think maybe a sell-off later in the day, take it down, and then idle it back up into the FOMC announcement tomorrow. So I see basically a trading range. I think the market, when they raise interest rates, will get a quick sell-off, but I think eventually the market will be bought. So we come in and look at this structure right up here. We've got this 34 level. We've got this 30 area. We've got 36 up here. So 30 to 36 is pretty stout resistance. And yesterday morning the market managed to get up to 29. So we're going to put stops above the overnight session high. So we're going to make 29 to 34, sell 1. 39 to 44, sell 2. On the buy side, 15 to 20. Pick up this area right in here. And then 5 to 10. And given yesterday's volatility, hopefully we have enough volatility to allow us to execute in these ranges. Yesterday was a trip. Nothing but V tops and V bottoms all day long. And 3 points or a lot more off of each of those V tops and V bottoms. That was a pretty good day trading, all things considered. It's going to take a bit to get everything up and posted. I'll get busy on that. I will see you as soon as possible.